We are live. We can start now.
Okay, thank you so much. Hi, everyone, and good afternoon. Welcome to this session. My name is Sonali Palande, and I look after the derivatives product at HDFC Securities. So, in today's session, we are going to Ravi, are you talking anything?
Yeah, all okay.
Okay, yeah. So, in this session, we are going to talk about a very important factor, that's the risk management when it comes to the derivatives trading or F&O trading. So many times, you must have felt that your market view was correct, but still you incurred the losses. Let me know. I mean, we are live on YouTube, and you can let me know into the comment box that if you have ever faced a similar condition that आपने कोई position लिया है, आपका एक particular direction set होगा, your target was set, but then because of the volatility or because the market went total flat, especially into option buying, you must have incurred losses. ऐसा कोई condition, if you have faced, you can let me know your experience into the comment box. Okay. But while you're commenting into the YouTube comment box, I'll also share that when we talk about F&O risk management, many of the F&O losses are not because of the wrong market view or not because of the wrong analysis. They are because of the poor risk management. Okay, so by this, you can understand that what is the importance of risk management when it comes to the F&O trading. All right. So in this particular session, we are going to learn simple 3 steps module to do a right risk management around your F&O trades. All right. So that can work in any kind of a market view, be it bullish, bearish, or even range bound. Okay. So let's go forward. This is a standard disclaimer. The content and explanation shared in this webinar are only for information and educational purpose. Stock market trading investments are subject to market risk. Please consult your financial advisor before making financial decisions. So we are all set. Now, when it comes to the F&O trading, what's the biggest risk that we are exposed to? So you can comment in the comment box, and probably I can look at the comments over here. Let me know what do you think, what are the risks that are involved into F&O trading. So, it can be volatility or it can be whatever, market not moving to your direction, but ultimately everything boils down to one thing, that is losing money, right? Financial loss can be the ultimate risk that you are going to face. Yeah, I've started getting the comments, but everything ultimately boils down to losing money, even if any kind of risk is involved over there. But what we are exposed to on and what we do not want to happen is losing money, right? So with correct risk management, we can avoid or we can at least have a control on this factor. Okay, we will not always eradicate this particular possibility of losing money, because when we trade, there is of course possibility of us going wrong in terms of direction or whatever, and there are chances of losing money, of course. But with the risk management, we can at least control it to some extent. Okay, so now in an ideal trade, when we do the risk management, your risk should be known before entering to any position. So this particular session is not limited to talking about the stop loss. Okay, this is something very advanced level about just keeping a stop loss to your position. All right. Now, when we talk about an ideal trade, whenever you are creating any position, let's say you are planning to entering into a certain position, you should know what is your maximum risk involved in that particular trade. All right. Second point, it should be acceptable to your capital. So let's say your capital, let's say it can be 1 lakh, 1 crore, anything, but then the total risk that is exposed to in that particular trade, or even combined to your all the positions, the whole risk should be acceptable to your capital. It shouldn't happen that even if your trade goes wrong, or even if your position goes in loss, a bigger chunk should not be lost through that particular position. So this is how it should be acceptable to your capital. And lastly, it should be manageable even if the market surprises you. सो इमेजिन, आप इमेजिन करो कि आपने कोई पोजीशन लिया हो और मार्केट, मतलब आपने बिल्कुल, फॉर एग्जांपल, इफ यू आर एक्सपेक्टिंग द मार्केट टू गो अप, ओके, ज्यादा से ज्यादा आपको लग रहा होगा नहीं जाएगा ऊपर, बट देन इट कैन गो फ्लैट, ओके, बट यहाँ पे आपको बिल्कुल सरप्राइज मिल गया कि मार्केट में तो बिल्कुल नेगेटिव साइड आ गया, ओके, देयर इज अ सर्टेन drop into the market. So such surprises also your position should be able to bear. All right, और ऐसे बिल्कुल अपोजिट काइंड ऑफ सिनेरियो में आपके लॉसेस आउट ऑफ हैंड नहीं जाने चाहिए. All right, so how do we do all of this? We are going to understand in this session. Now, what are the simple steps to arrive at a effective risk management? You can see on the screen. सबसे पहले हमें मार्केट का डायरेक्शन निकालना है. ओके, सो टू अराइव एट अ राइट मार्केट डायरेक्शन, we have to do certain analysis. So for analysis, even in our own platform, we have certain analytical tools, okay, but this particular session we are not going to talk about the analysis. We have even done so many sessions before this on the analysis part, or we are even going to come up with particular focused analytical pieces of the F&O. But then right now, first step, just understand that taking out a market direction, okay, now you have arrived on certain idea that market can go up, it can go down, or it can stay in a range. All right, second is that picking a right strategy instead of a naked call or put. Now this is the main step or the core step that is related to our risk management. Now if you're not hedging your position, okay, if you're doing plain option trading, be it buying or selling, okay, आप नेकेड कॉल या पुट बाय कर रहे हो या नेकेड कॉल और पुट सेल कर रहे हो, राइट, यहाँ पे इस स्टेप में हम लोग क्या कर रहे हैं कि वी आर डूइंग अ राइट स्ट्रैटेजी अराउंड द व्यू. वी आर नॉट टेकिंग अ नेकेड पोजीशन, ओके, वी आर हेजिंग द पोजीशन, ओके, विथ मिनिमम 2 legs मतलब मिनिमम 2 contracts, okay. Now, when we talk about strategy, it can be even, 10 legs, 10 contracts, or 15 contracts, 20 contracts. It can be, very complicated, but then just to begin, we are not going to go into much complexities, and we are going to keep it as simple as possible to fit it to the beginner crowd. Okay. So this step, I'm going to explain you how do we transform any view into a simplest kind of a strategy, okay, so that your risk is managed effectively. And lastly, the third step is selecting right strikes and the checking the payoff. Okay, so what does it mean? Even if you know which strategy to choose, so for example, you have a bullish view, okay, bullish view में आप अगर naked call या put लेते, अगर आप option buyer हो तो आप call buy करते, राइट. अब यहाँ पे हम लोग ने स्ट्रैटेजी क्रिएट करनी है. सो सिंपलेस्ट स्ट्रैटेजी टू एनकैश अपॉन अ बुलिश मार्केट इज अ बुल कॉल स्प्रेड. ओके, सो बुल कॉल स्प्रेड में 2 कॉन्ट्रैक्ट्स इन्वॉल्व होता है. एक तो आपका प्राइमरी पोजीशन बाय वाला, एंड देन टू कवर द रिस्क वी आर गोइंग टू एड अनदर कॉन्ट्रैक्ट which is a sell contract. Okay, I'll explain that strategy as well. But यहाँ पे जो कॉन्ट्रैक्ट हमने सिलेक्ट करने हैं, द कॉन्ट्रैक्ट्स which we are going to select, the particular strikes also we have to decide, right? So those strikes, selecting the right strike is also important, and checking the payoff for those strikes. So when you change the combination of the strikes, your payoff मतलब जो आपका मैक्सिमम प्रॉफिट होने वाला है, मैक्सिमम लॉस होने वाला है, या फिर जो आपका ब्रेक इवन पॉइंट आने वाला है, all those details can change basis on the combination of your contracts. Okay, so we will see all of that. Now, first of all, let's look at the market condition, basic market conditions, and what we can do instead of going the naked call or put. All right, so if you have a bullish view, instead of just buying a call, we can have a bull call spread. Okay, into the bearish market view, instead of just buying a put, we can have a bear put spread. All right, and lastly, so these two first two scenarios, This is specified to option buyers. Now option sellers का उल्टा रहता है. So if you have a bullish view, you are going to sell a put. If you have a bearish view, you are going to sell a call. Okay, but then that is also naked. So the sentiment is similar over here as well. Now into the range bound market, only the option sellers had a actionable earlier, right? But option buyers को range bound market पर encash करने के लिए कोई opportunity नहीं था. So this also we are going to open up. Okay, so if you have a range bound market view that it's not going to go anywhere. So these days, even if we are having a gap up open, gap down open, but still during the market hours, it is staying in a certain range and it is not giving a much of a volatility where option buyers can encash upon that. So in such conditions, we can create a iron condor strategy. So option sellers could have done a short straddle or short strangle, but then into that the risk is unlimited, right? So this is now common for the option buyers and option sellers as well. So even if you have the range bound market view, we can create this particular iron condor strategy. नाम थोड़ा सा complicated है, but it is not that complicated. I'll make it easy for you. Okay, so let's go towards the first strategy. First strategy, bull call spread. Okay, here the view that we have is a bullish view. Okay, so here what we have to choose. Remember, we have to also select the right strikes. So here what we are doing, we are buying one at the money call option. Okay, and we are selling one out of the money call option. Similar call ka hi combination hai, but we are buying one position. So what is happening over here? So what we will do, we will not stick to the PPT only. We will go to our platform where I can show you how do we create these strategies, how do we look at the payoff, and how do we still, see all the details. Okay, so let me switch my screen. So we have this platform called Next Option. If you can see this I have opened as InvestRight web login. Okay, so this is available for InvestRight and Sky, both the users. Let me show you the entry point for InvestRight users first. So this is the web page, correct? Here, InvestRight login you have to do with your existing credentials, nothing new, okay? You have to log in using this button, InvestRight login. You will land on this dashboard. On the dashboard, you will see this next option box, right? So we just have to click over here. It will ask for the authorization and we can land upon the dashboard of this particular platform. Now this platform we have made available to all our users without any cost, and it has very advanced level of analytical tools, execution tools, whatever orders you want to place, even if multiple legs all together. So complex basket orders you can place from here with just one click. Okay, so this platform is available to all our users without any cost. Now let me also show the Sky users the entry point. This is the web portal for the HDFC Sky users, right? On the dashboard, you can see next option over here. Same way, you have to click here, give authorization, and it will open in the next box. Similar thing, okay? Just the entry points are different. Now, it has a lot of, it is packed with a lot of features, but then currently we will look at the strategies first, and at the end, if time remains, I'll go to another features. So after coming to this platform, I'm going into strategy builder. Okay. So here we can build our own strategy. So we were talking about a bull call spread. Okay. For the bullish market view. Now what I'm going to do, I'll first show what happens if we just buy a call. Okay. So the market is, it closed near to 26,172. So just choose 26,150 call. So let's say we have to buy this particular call. So now if we take just one contract, if we take a naked call buy position, what is the payoff? Okay. So here the maximum profit is unlimited. Maximum loss is 4,360. Now this maximum loss is everything that I've paid, because this is an option buying position. And if my view goes wrong, this 57.55 premium can go to zero, right? So everything that I've paid, I can lose. So maximum loss is 4,360. Other details you can see, we can also see margin required. We can see what is the break even point for me to go into the profit into this particular strategy. Okay. And we can also see the probability of profit, the payoff graph for this particular strategy. P&L table, strategy chart, multi-strike OI. We can see everything over here. But now let me show you what happens if I make it as a strategy of a bull call spread. Okay. So my view remains same. All right. Now what I'm going to do, I'm only going to add one risk management contract over here. So I have to, what happens in bull call spread? We have to buy one at the money call option that we have already added. We have to sell one out of the money call option to manage the risk. So here I'm going to sell one 26,250 call option. Okay. So I added that and I confirmed. Now, if you see my maximum loss, which was earlier 4,300, that has come down to 2,723. Okay. Also, even if my max profit has come down, earlier it was unlimited. Okay. But honestly, realistically speaking, we do not remain into any position for an unlimited kind of a profit. We have to cut it down somewhere, right? So here, even if the maximum profit has come down from unlimited to 4,700, you can see the probability of profit has gone up from 38% to 45%. Okay. So also the break even, which was earlier 26,207, has come down to 26,186. So it is easier for us to go above this level, right? Our break even point will come earlier as compared to the naked call option. So I hope this, this particular comparison is, clear to all of you. Now, there is no hard and fast rule which contract we have to sell over here. Okay. So I'll just show you the difference. I'm changing the strike. We have this plus minus signs over here. We can just click over here, and basis on your risk appetite, you can decide which contract you want to use as a risk manager, as a hedge. Okay. So here, as I'm changing it towards the further OTM, my maximum loss is increasing and my maximum profit is also increasing. Okay, so whatever suits you as per your conviction, as per your risk appetite, you can choose the risk management or the hedge contract over here. Okay, so let's say that whatever we discussed about a bull call spread, you probably understood, but when you will go to execute or when you will go to the platform, you may not remember which strike to buy, which strike to sell. Okay, so this platform will help you in that case as well. So you see this particular box over here, correct? Bullish, bearish, neutral, other. So what you have to do, you just have to give your input, what is your view for that particular selected underline. Okay, and we have selected bullish over here. You can also see which all bullish strategies that are there available. Okay, so I'm selecting bull call spread. It is going to give me the ready-made strategy based on my view. Okay, so further I can adjust this as well. So I don't want to go with 26,450. I came back to 26,350 and I adjusted my P&L over here. Okay, so this is how we can get the strategies ready as well. I technically do not have to remember which strikes to buy and sell in a particular strategy. Okay, we can just give a view and we can select the strategy. There are other strategies as well for a similar kind of a view. Now, we looked at the bull call spread. Now the next is the what we had seen for a bearish view, a bear put spread. Okay. So we will look at the Q&A at the end of the session. Simultaneously, I'm not able to look at the comments while I'm talking into the session. So at the end, we will take the Q&A and I will definitely answer all of your questions. So this is a bear put spread, which goes with your negative market view. Okay. So here, this is just opposite to the bull call spread. We have to buy one at the money put option and we have to sell one OTM or out of the money put option. So similarly, let's look at the platform. How do we do it? Okay. So I cleared this. I want to create another strategy. So similarly, I'll not again show you what happens if you just take one put and then, what happens when you hedge it, because it is going to be similar to what we saw for a call. Okay. So I'm going to buy 26,150 put and let's sell 26,950 put. Okay. So now you can see I have created this bear put spread and my maximum profit over here which is based on the calculation is that 11,771, maximum loss is 3,229, right? Other details you can see over here. You can adjust the strikes based on your risk appetite, based on your, based on your conviction, right? And you can execute the strategy. So whenever you want to execute the strategy, you can click on trade and you can place the orders right from here. Okay. So let's say that you don't remember which contracts to take for this particular bear put spread. So what you can do over here, you can just give a bearish view and you will get all the strategies which are based on option buying, which are based on primarily option selling for this particular view. So here, let's take an example of a bear put spread. So system is giving me these strikes, but then we can always, adjust these. So what we are trying to do over here is that, the maximum loss part can hurt most of the time to the most of the traders. So what happens, especially into F&O trading, is that let's say you are making certain average number of profit daily, all right? But then when you are losing, let's say you are losing just 1 or 2 days in a week, okay? But then your maximum loss or the loss that is incurring to you in that account is way higher than your average profit, then in that case your P&L will never be stable. Okay, so as a primary trader or as a effective risk management, what we have to manage is the loss that can incur to our positions. Okay, so here when we create this bull call spread or bear put spread, what we have to look at importantly is the maximum loss that can incur into that particular strategy. And when we talk about maximum loss, we have to compare it as a risk reward. So what is my maximum profit and what is my maximum loss? So based on that, we can take that particular position. All right. And yeah, so this is for the bearish view. Now, one more strategy we had discussed was the iron condor. So this particular strategy, I'll explain you all first. So this goes for option buyers and option sellers as well. Okay. Now, option sellers must be doing short straddle or short strangle to encash upon the flat kind of a market. Option buyers might not have done any kind of strategy or any kind of actionable for a flat kind of market, or you must have incurred losses whenever the market went flat, right? For option buyer to make money, there has to be market momentum. Whenever the market goes flat, the option buyers, especially they struggle because if there is no momentum, the ticking clock works against us, right? As option buyers. Now, this particular strategy, you have to pay attention, all right? This particular strategy will have 4 legs or 4 contracts involved into it, okay? Now, what we have to do, how do we create this particular strategy? In this strategy, what we are expecting the market to stay range bound. Okay, so when we say range bound, there will be one support and one resistance, or one upper range or one down range for your particular range bound zone. Correct. So what we have to do, we have to sell that call and put option of a support and resistance, upper range and down range. Okay, and then we cover the risk on both the sides. So when we say we cover the risk, I'll show you live that what do we do. Okay, now let's open the option chain. I'm trying to look at, I'm not going deep into how do we take out the support resistance. I have taken multiple sessions by looking at open interest. How do we take out the support resistance? So here, okay, so now what we see as per the data, and let me make a point over here is that this is only for the educational purpose. I'm not giving you any trade or I'm not suggesting any position over here. I'm just trying to explain the concept of iron condor, and for that I'm taking out some strikes. All right. So here, let's say based on your conviction or based on your analysis, you have taken out 2 ranges, upper range and down range of support and resistance. For example, 26,200 and 26,000. 26,000 as a support and 26,200 as a resistance. Okay, so what we do in this particular strategy is we sell both this call and put as a primary position, okay, which makes it as a short strangle. Okay, so I'm selling this particular call of 26,200 and I'm also selling 26,000 put. Okay, now these are my primary positions. Now what I'm going to do, I'm also, right now, if you can see, let's just look at the payoff over here. Okay, so here I have sold both of these positions. Now look at the payoff. My maximum loss is unlimited. Why? Because as per this strategy, what I'm trying to say is that the market will remain into 26,000 to 26,200 range. Okay, this is a hypothetical example. Now, but then if my view goes wrong and if market goes beyond any of this point, about 26,200 or below 26,000, I will be exposed to unlimited risk over here. Okay, so this makes this particular strategy as an unlimited risk strategy, which is not really, not really fit for the beginners or the people who are trying to understand about the initial risk management into F&O. Now, what we are going to do, we are going to cover the risk for these two trades. Now, how do we do that? I'll add two more contracts. Okay, now these were the selling contracts. I'm going to add two further OTM call and put. Okay, so 25,900 put I'm going to buy and 26,300 call I'm going to buy. Now there is no hard and fast rule what should be the distance. Okay, you can change the distance between your selling strikes and buying strikes, but only rule you should remember is that both the sides, it is required to keep the distance as similar. Okay, if you change the distance on both of the sides, your payoff will be slightly different. But then for the beginners, just to avoid the confusion, we will try to keep the distance same on both the sides. Okay, now if you can see, your maximum loss, which was earlier unlimited, which has come down to 5,200. Okay, now here, even if my maximum profit is, it is even lower than my loss, 2,254, my probability of profit is comparatively higher. Okay, and this is primarily not giving me right numbers is because the expiry that we have selected is just tomorrow. Let's just switch to 30th December expiry. Yeah, now you can see I just switched the expiry. Okay, and now you can see that my maximum profit has gone up and the maximum loss has come down. Now, this is not the magic of this strategy. The magic of this strategy is that this break even point. Okay, as an option trader, I'm getting a wide range from 25,933 to 26,266. So 300 point range I'm getting over here to be profitable. What does it mean? अगर के एक्सपायरी इस पॉइंट के बीच में कहीं पर भी होती है between 25,933 to 26,266, I will be in profit. Okay, so as a option trader here, I do not have to chase a certain direction. What I'm doing over here, I just took out a certain range where the market can remain between that, and I created a strategy around that. So here, the primary positions over here were two selling contracts of upper range and down range. Okay, and we are covering that risk with the help of the further OTM call and put buy positions. Okay, so these buy positions are only to cover the risk, which was earlier unlimited. Okay, so you can also select, you can also check other details over here. Okay, there are multiple details into the multi-strike over strategy charts and everything. You can also check the Greeks for all the contracts and everything you can see. You can also adjust your target. Okay, you can also adjust how many days for remaining for the strategy, and you can check your P&L. Now for the neutral view, just like we saw the iron condor, we can see multiple other strategies as well. So this platform gives you, multiple ways to encash upon your view. Okay, with the even with the help of a hedged strategies. It will also give you the, naked call and put options over here. But then there are ample of other options which are hedged. Okay. And uh, best part of this particular feature is that it tries to help you to be informed at any point of time what is your maximum loss or what is your maximum risk in that position, and how much can you gain against that. So even if you create positions and if you go into trades, right now I don't have any trade over here to show, but then if you have any positions and if you go to the trades page, this is nothing but your positions page. Okay, so you can look at the positions as a group. So let's say you have one strategy deployed in Nifty, one strategy deployed in Bank Nifty. So here you can check the P&L for that particular strategy. For Nifty strategy, what is my P&L? For Bank Nifty strategy, what is my P&L, and all of that. So strategy wise, you can, you know, check this. And you can also see the payoff for your positions. So here, once you have a position over here or a strategy live over here, you can get here as analyze button. Okay, once you click on analyze, you can see all the payoff of your positions as well. Okay, so that is really important for you to decide if you have to stay in that strategy, if you have to cut down, if you have to book the profit, whatever it is. But then it helps you to take a quick decision. Right now, this was about the strategies or the hedged position that we can create based on bullish, bearish, and range bound market view. Okay, now this was around a risk management discussion. Now I'll quickly, within 2 minutes, I'll also show you other features that we have in this platform which can help you to take better decisions, and it will also help you to be a better trader. And then we can go towards the Q&A. Okay, so this is the landing page where you will land. So this is nothing but improvised version of the watch list. So as option buyer, as option sellers, primarily you create multiple pairs for the straddles. So this platform will give you ready-made straddle pairs. Okay, you can see the current net premium that you would get. You can put long or short position. So let's say if I want to go short on this particular pair, I can just click on short and I can execute the trades. Okay, it is giving us all the other details as well. If you have to create your own watch list, you can always click here on add watch. Okay, now strategy builder we have already seen. Easy options is something which is very friendly for the beginner traders. Okay, this will also give you the strategies based on your view. Now this will ask you some very simple questions. All right, so first question, where do you think Nifty will go by tomorrow? You can select the underlying which you want to go with. Okay, I'm just giving you an example of Nifty. Now let's say I have a view of up. Okay, hypothetically I clicked on up button. Now this platform is giving me three approaches which I can select based on my own risk appetite: defensive, balanced, and aggressive. All right, so here let's say I want to go with the balanced one. Okay, prima facie level I can look at the maximum profit, maximum loss, and we can also look at the what are the contracts involved into more details. But first decision point is for me max profit, max loss. Okay, so into the balanced version, let's look at the details. Okay, so here it's a bull call spread. All right, so we can look at the details and we can also trade based on this. So here we have not even selected any strategy name or nothing we have done. We have just given our view and we have just selected the risk appetite that we have. And we can, get the trades based on this. And, we can have the perfectly balanced positions right from here. All right, then for the analytical tools, we have option chain. Right from option chain, we can create the baskets as well. Into analyze section, we have market movers, rollover analysis, F&O ban list, live option charts. There are multiple, very advanced level features that we can analyze to arrive upon a F&O trading decision. Then the basket we have seen. So Basically, we can create the baskets over here. We can save it for a later day and we can execute it on that particular day. We can basically save the baskets over here, right? Then you can create the alerts based on very dynamic, factors. So I'll show you the alerts over here. So for example, I go for this particular pair, and if I click on set alert, you can see what all alert criterias that we are getting over here. We can give it based on the profit and loss. We can get it based on the absolute value. We can, just enter greater or equal to, lesser or equal to value, or we can even give this for P&L per set, net Greeks, net premium. So, whatever criterias that you can arrive for the alert, that we can enter over here. All right. So the alert section is also very, very, advanced. Also, the trades page, we have already discussed that the positions you can, track based on the baskets that you had created or based on the groups that you had created. Now, one page that is there in this particular segment only is the order. So here you can track the open and executed orders. Okay. So this comes out as a whole next option platform, which you can access from either InvestRight web platform or the Sky web. Okay. So yeah, yeah. So what is the bottom line when we talk about this particular session is that whatever view you may have into the market, be it bullish, bearish, range bound, you can be option buyer, you can be option seller. But, it is important that you hedge your particular position, that, what does it help you to, how does it help you is that you can always understand what is your maximum risk that is involved in that particular position, and what you can even expect on the upper side as well when it comes to your profits. It will also help you to take a decision where to book the profit as well. Okay. When you see the unlimited profit, it doesn't give you a clue till when or till how much it does, this particular position can go up. Okay. But when you know a certain number that this is the maximum profit that is involved in this particular position, it can help you to take a quick decision that if you have to cut down this position at this particular level of profit, or you have to wait for certain level, is there any more scope remaining. Okay. So this is how creating the positions with the help of hedge can help you to be a better trader, to be ready for any kind of scenarios that can come into the market with whatever kind of position that you have open. Okay. So this is all from my side in this session. So let's look at the questions that we have. I'll go into the YouTube chat box and I'll try to take some of the unique questions. If you have any questions, you can post into the chat box. So this particular session is, streaming live on YouTube. So once this session ends, you can also access the recording on the YouTube channel of HDFC Securities, and you can watch it anytime. So one user has appreciated the platform, that your platform has great features that would help with upfront risk management. Thoroughly enjoyed learning strategies from you. Thank you. Thank you so much, sir, that, let us know, everybody can let us know your view, if, how we can improve such sessions, or what all other discussion points you want, which all, topics we can come up with. You can always suggest that. How to use stop loss for next day after purchase through lot. So this is only possible with the GTD order. but then we are working on to getting the GTT order into the F&O section. I'll keep you all updated once we have it. How to see put and call ratio in bar. So let me go back to the platform. One thing, if you just want to look at the PCR ratio, we have it into the InvestRight web as well. I'll go to the option chain. Sorry, derivatives. And yeah, here you can see the overall call OI, overall put OI, and the PCR that is running for that particular underlying that you have selected. Okay. And into next option, I have gone into the option chain, and if you scroll it on any of the side, so the call and put side, if you want to scroll, you can look at the PCR column to get the strike wise PCR, which is live. Any more questions from anybody? So, all of this discussion was primarily around creating the positions into F&O. But if any viewers do not have the derivative privilege, they can activate with the help of just one OTP. So if you have the InvestRight app, you can see, we have the F&O dashboard right in the middle of the InvestRight app, correct? So there you can see missing opportunities, activate derivative privilege banner just on top. So you can, click there and you can activate your derivative privilege if you have not activated the segment yet. So trade into F&O, we have to have the segment activated. So that is now possible with the help of just OTP confirmation. We do not have to upload the documents or anything. So that is also an easy step. Any more questions from anybody? All right, then. So this was, the discussion around the risk management and the hedged strategies that we can do into F&O as a beginner. But our own research team that we have in-house, they also suggest and recommend the, option strategies, at least twice a week to which is aligned to their own view on the market. So if you want to work upon the strategies, get in touch with your RM. They can help you with the strategies, with the report and everything, and you can also work upon the strategies based on the based on the view of the research team that we have in-house. So this is all from my side. And thank you so much, everybody, for joining. And do explore this platform, which can be very helpful for all of you to, make certain definite decisions into F&O trading with the hedged strategies, basket orders. So everything, all of that execution has been made easy with this platform called NXT option, next option. Okay, so do explore and let us know your feedback. And thank you so much for joining, and happy trading for tomorrow's expiry. All the best. Thank you.